I discovered a really simple hack that helped me improve the way I was using Heikin Ashi charts. I call it the 3+3 model. In 6 simple steps, it helped me improve my approach to trend identification using these charts. Heikin Ashi is popular for being easy to use and represents a whole heap of advantages, especially for people who are new to trading. And the notion of not having to learn the price action patterns is itself a big plus, because it's not easy to recognize these patterns when the market is in full swing. So with this in mind, I quickly learned everything there was to learn about Heiken Ashi candles. For instance, the open of a Heiken Ashi candle is the average price of the preceding candle, and similarly, the close of a Heiken Ashi candle is the average of all the different price points from within the candles. If you're interested, watch my video on Heiken Ashi candles. In this approach, we will first learn about 3 things that we should know about Heikin Ashi charts, and then we will discuss 3 signs that will help us identify trends on these charts. So let's begin with part 1, where we will discuss 3 key things about Heikin Ashi. The most important piece of information is that large shaved candles are of unique importance in Heikin Ashi charts. A shaved bottom candle is the one which has no lower wick, a large candle body, and a large upper wick. This shows a strong bullish trend. Similarly, a shaved top candle is characterized by a large red candle with a long lower wick and no upper wick. This is considered to be a sign of a strong bearish movement. The second thing we need to know is that small body or doji candles indicate indecision in the market. And it's not particularly a bad thing. Every market needs to go through a correction. So every time we see such a candle, we should know that the market is going through an indecision phase. The size of the wick indicates trading pressure in opposite direction. So when we see a long bottom wick, we should know that there is buying pressure developing, and similarly, when we see a strong upper wick, we should know that there is a strong selling pressure in the market. So before we move any further, let's do a quick recap. This knowledge will be particularly helpful in our second phase when we would define the signs that we need to look for when identifying a trend. Let's get into the next phase of identifying the 3 signs that we are looking for. I will demonstrate this for a bullish trend. The same principle in reverse will apply for bearish trends. The 3-step approach has a prerequisite. I call it a prerequisite because it's not a must condition but is a really good sign to have. And that is if the trend is preceded by a series of indecision candles, because this shows that the market is moving sideways and the sellers have had the chance to cool down their positions. Now that we know this, let's move to step 1 of our approach. This is the phase of trend identification. So a trend can only initiate when you see 2 or 3 strong candles in one direction. For instance, the presence of these 3 shaved bottom candles indicate that a trend may be initiating. Even 2 candles would have worked. This is an important point to note because only a strong shaved bottom candle can indicate a bullish trend. What if we saw some other green candles in this place? Well, we will not use this as an indication of trend initiation. Similarly, the initiation of a bearish trend will be indicated by the presence of shaved top candles. We need this to confirm that the trend is initiating. The next step will help us provide confirmation to this trend. Some people also call this as trend continuation, which is following the first 2 or 3 candles, we see more candles of the same trend, which do not have to be strong candles, which is not necessarily a shaved bottom or shaved top candle, but they need to be in the same direction, indicating that the trend is showing signs of continuation. This takes us to the final step of our approach, and which is that the trend should only show signs of a small pullback or indecision, but not a proper reversal. Well, in a real market, it's hardly that we see a trend go strongly from point A to point B. And at the same time, we also hardly see a place where the price following a strong bullish run, instead of taking a small correction, it takes a big reversal, then goes up, takes a big reversal, and then goes up. This phenomena is hardly ever visible. What we instead see is the price gradually moves up, takes slight bit of corrections, and then moves up again. This provides for a much more stable price action. Now that we have covered the 3 signs that we were looking for, let's do a really quick recap. to remember what signs we were looking for. So any trend should ideally have a series of indecision candles to begin with. This is a good initiation sign. Then it should show a strong movement with a strong shaved bottom or shaved top candles. The trend should then continue, and at any point it should not show a sign of big reversal but minor pullbacks or phases of indecision. So now that we have covered our approach, let's quickly use an example to see how this works. This is how the trend initiation will look like. A presence of 3 shave bottom candles, which indicate a bullish trend has initiated. The absence of lower wick indicates that the low of any session did not reach the midpoint of the preceding candle. We see this trend continue for another few sessions, which is our step 2 of our approach. Looking at the trend so far, as there are no lower wicks in any of these candles, it suggests the bullish trend may continue. We now see a doji candle, which is a sign of market indecision. This is the third sign of our model and indicates a market indecision. Luckily, the indecision did not last and we see another green candle. Now this trend continues. We do, however, see a couple of doji candles. But should we be alarmed? Well, not according to our model. A sideways movement is natural in this kind of a trend. I hope this example gives you a good point of reference on how a trend is to be read, and as long as we keep on seeing a upward movement supported by a sideways or indecision movement, we are okay. It's only when we see a strong pullback is when we apply caution, and when we see that trend continuing, having a small pullback or sideways movement is natural in a strong upward trend and should not be taken as a sign of bearish play unless we get a proper bearish run. I hope this example was really helpful in understanding how the approach that I defined can be applied in understanding a market trend using Heikin Ashi chart.